There's a purchase wealthy people make almost every single month that never shows up in any budgeting app, any finance course, or any how to get rich book. It's not stocks, it's not real estate, and it's definitely not a Rolex. Most people spend their entire lives working around money without ever being shown what actually separates a wealthy household from a struggling one. It's not the amount they earn, it's what they choose to buy with it. After going through interviews, spending reports, and financial disclosures from people worth 7 figures and up, I found 10 specific purchases that show up again and again in wealthy households, and almost never in average ones. None of these are flashy, none of these will impress anyone at a dinner party. But every single one quietly compounds over years in a way most people never notice until it's too late to catch up. Number 1 on this list is the cheapest, and it's the one most people skip first. Let's get into it. Here's a fact that surprised me when I first came across it. According to a report from a major wealth research firm, households in the top 1% spend nearly 3 times more on what's categorized as time-saving services than households in the middle class, even when adjusted for income. That's not a coincidence. That's a strategy. And here's the second fact that makes this even more interesting. A separate survey found that over 60% of self-made millionaires said their biggest early financial mistake was doing tasks themselves that they should have paid someone else to do. Not spending too much, not investing too little, doing things themselves that were actually costing them money and lost time. That tells you something most people never get told directly. Being wealthy isn't just about earning more. It's about buying back the one resource you can never make more of: time. Once you see that pattern, you can't unsee it in every item on this list. Let's go through the 10 things. 1. Insurance nobody talks about. Most people know about car insurance and health insurance. Wealthy households also carry something called an umbrella policy. It's inexpensive, usually a few $100s a year, and it protects everything else you own if you're ever sued for more than your normal insurance covers. Picture someone getting into a minor car accident that turns into a lawsuit. Without this policy, they could lose their house, their savings, even future wages through garnishment. With it, one phone call handles everything, and their actual assets are never at risk. Most insurance agents won't bring this up unless you ask, because the commission on a $300 umbrella policy is tiny compared to other products they'd rather sell you. The first step here isn't buying a policy blindly. It's asking your current insurance provider for a quote on umbrella coverage this week. Most people don't even know to ask, and that single question alone puts you ahead of the majority of homeowners in this country. 2. Professional tax planning, not just tax filing. There's a difference between someone who fills out your tax forms in April and someone who meets with you in January to restructure how your money moves all year. Wealthy households use the second kind. It costs more upfront, sometimes a few $1,000s a year, but the savings it generates usually multiply that cost several times over, sometimes by 5 or 10 times depending on your income structure. This isn't about loopholes or anything questionable. It's about timing income, structuring deductions, and using the tax code exactly as it's written, just proactively instead of reactively. The first move isn't hiring the most expensive firm you can find. It's asking any tax professional one specific question: what am I currently overpaying on? If they can't answer that clearly within the first conversation, that's your sign to look elsewhere. 3. A paid financial second opinion. This one surprises people. Wealthy individuals will often pay a flat fee, sometimes $500 to $1,000, just to have an independent advisor review their existing financial plan with no ongoing relationship attached. No commissions, no pressure to buy products, just an outside set of eyes checking for blind spots in insurance, investments, and tax exposure that the person's regular advisor either missed or never mentioned. Picture handing your entire financial picture to someone whose only job is to find what's wrong with it, with zero incentive to sell you anything afterward. That's the value, and it's exactly why this option barely gets marketed. There's no product behind it to push. Your first step is searching for a fee-only fiduciary advisor, someone legally required to act in your interest, not in the interest of what they're selling you. and booking a single one-time consultation. 4. High-quality basics instead of visible luxury. This is one of the most misunderstood parts of wealth. Walk into most self-made millionaires' closets and you won't find flashy logos. You'll find plain, well-made clothing that lasts for years instead of months. A $200 pair of shoes that survives a decade costs less per year than a $60 pair replaced every 6 months, and that same math applies to bags, coats, and even kitchen tools. The math quietly favors the wealthy here, and almost nobody points it out because it doesn't look impressive in the moment of purchase. The first step is picking one category, shoes, work bags, or outerwear, and calculating cost per year instead of cost per purchase before your next buy. You'll be surprised how often the expensive option is actually the cheaper one. 5. Education that isn't a degree. Wealthy households spend heavily on short, specific skill-based education. Think contract negotiation courses, specialized certifications, or private coaching in a specific business skill. It's not the 4-year degree route. It's targeted, expensive, and directly tied to increasing income within months, not years. Picture someone spending $3,000 on a 12-week negotiation course and using it to add $15,000 to their next salary negotiation, or a freelancer spending $800 on a specific software certification that immediately doubles their hourly rate. That's the trade being made over and over in wealthy households you'd never guess were investing in themselves this way. The first step is identifying one skill directly tied to your next raise or client and searching for a short credentialed course in exactly that skill, not a broad one. 6. Health optimization, not just health insurance. This goes beyond regular doctor visits. Wealthy individuals often pay out of pocket for advanced blood panels, personal trainers, or preventive screening that isn't standard in most insurance plans. It's expensive, often $2,000 to $5,000 a year, but it's treated as a business expense against their most valuable asset, which is their own working years. Picture someone catching a health issue 2 years earlier than they otherwise would have, simply because they paid for a test their insurance didn't require, avoiding both a medical crisis and the income loss that would have come with it. The first step is asking your doctor which preventive test you're not currently getting that you could pay for directly, even if it costs a few $100s out of pocket. 7. A real estate professional who works for the buyer, not the deal. Most people use whichever real estate agent they're handed. Wealthy buyers hire a buyer's agent specifically, someone paid to find flaws in a property, not to close a sale as fast as possible. Picture 2 people buying the same house. One's agent focuses on closing quickly to collect their commission. The other's agent spends an extra week digging and finds a foundation issue that saves them $40,000 in negotiations, or walks them away from the deal entirely. Same house, very different outcome, and most buyers never even realize this distinction exists. The first step is asking any agent directly, "Are you representing me exclusively or also the seller?" And getting that answer in writing before you sign anything. 8. Subscriptions to information, not entertainment. This one is subtle. Wealthy households often pay for specific industry newsletters, market research reports, or private data services that cost $500 to $2,000 a year. Not for fun. For decision-making. Picture someone paying $60 a month for a report that helps them avoid one bad business decision worth $20,000, or a landlord paying for a local market report that tells them exactly when to raise rent without losing tenants. That's the return being chased, and it's a completely different mindset than paying for streaming services purely for entertainment. The first step is identifying one recurring decision in your life or work, whether it's hiring, investing, or pricing, and searching for a paid resource built specifically around that decision. 9. A will and estate plan before it feels necessary. Most people assume estate planning is for the elderly or extremely wealthy. In reality, self-made millionaires often set this up in their 30s, long before they'd call themselves wealthy. It typically costs $500 to $1,500 with an attorney, and it prevents family disputes, unnecessary taxes, and confusion later, especially if there are kids, a business, or shared property involved. Picture a family losing a third of an inheritance to legal fees and court delays simply because nothing was written down, all because everyone assumed there was still plenty of time. The first step is searching for an estate attorney offering a flat fee basic will package, which most people are surprised to learn exists for a fraction of what they assumed it would cost. 10, and this is the one that ties everything together: time itself. This is the pattern behind every purchase on this list. Wealthy households pay to remove friction, tasks, decisions, and risks, so their remaining hours go toward the things that actually grow their money or their skills. It's not about avoiding work, it's about being deliberate over what work is worth their hours and what isn't, and being ruthless about outsourcing everything else. Picture someone spending $40 a week on grocery delivery, not out of laziness, but because those two saved hours go directly into a side project generating far more than $40 week after week, compounding into thousands over a year. That's the trade being made across every single item on this list, whether it's an umbrella policy, a tax strategist, or a buyer's agent. Every purchase is really the same purchase, just wearing a different name. Here's what ties all 10 together. None of these purchases are about looking wealthy. Every single one is about protecting money already earned, saving time that can be redirected, or preventing a future cost that's far larger than the upfront price. That's the actual difference. Not luxury, not appearances. Deliberate, unglamorous purchases that most people never get shown, because nobody profits from telling you about them, and none of them come with a flashy logo to brag about. If you're only going to start with one from this list, make it number 3, the paid financial second opinion. It's the cheapest entry point, it requires no ongoing commitment, and it often reveals 2 or 3 of the others you're already overpaying for or completely missing. Which one on this list surprised you the most? Let me know in the comments, because a few of these took me completely off guard when I first found them, and I'd genuinely like to know which one changes how you spend this month.